Hello, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vase, coming to you live from another airport. It's like I can only do these things from airports these days. Uh, these videos used to be daily, guys, but just been so busy with all of these events. It's like back to back to back. These blockchain weeks that happen, every week somewhere in the world. This one was in Singapore. I've been here, I think, 6 nights, and every day there's been an event, and that's why it's just been so hard to do content. As just been chatting to people, meeting people. So here we go. I'm at an airport. I am flying to Dubai. I will be in Dubai for the rest of the week. I believe I'm there till like Monday. I don't even know. It doesn't even matter. But I will be speaking at a conference tomorrow. Today is already Sunday, or it will be Sunday in about 5 minutes. And Monday and Tuesday, I will be speaking at AIM Summit. I'm pretty sure it's on my public calendar, and you guys can go ahead and check that out. Let's go to the charts. My flight is boarding in about 30 minutes, and I have not yet passed the security check. So, and I still have to find my gate. So let's move on with the charts. What? Let's go to the charts. Let's just go there. Uh, I haven't looked at a monthly chart in forever. Let me even refresh this. I don't even know if the monthly chart is updated. The monthly chart is a Heikin-Ashi chart, which doesn't update as often. And the reason why I'm using Heikin-Ashi charts for the monthly is because the Heikin-Ashi version topped on a 913 and it bottomed on a 9. Okay, so this tells me that sequential is functioning extremely well with Heikin-Ashi. And unfortunately, sequential did not take us into a 9 on this pump, which continues to baffle me. Even though the pump ended in July, it borderline still baffles me why it went up so much. Clearly, it overshot when it went to 14. This is grossly obvious in hindsight. And the reason why it's obvious in hindsight is because we've been sitting at virtually a 50% correction from that point for what, 3 months now, and that's what has me convinced that this was an unreasonable overshoot. If this wasn't an overshoot, we would have had like a short correction or a slowdown and then a continuation. So this correction continues to bother me, and we'll see where it goes. Let's look at the slightly lower level time frame, which is the weekly chart. We're going to look at this, uh, in a reasonable fashion, so that trying to avoid biases, which people think that I have. Look at the current weekly candle. Now, today is still Saturday. My computer is always on New York time for the US stock markets, no matter where I am in the world. So we do still have approximately 24 hours to go, maybe 22 hours to go till candle closes. Bitcoin can do absolutely anything in 24 hours. I believe Bitcoin went from 7,200 all the way to 10,000 in approximately that much time. So it really can do anything, but we have to assume, and because I probably will not do a video in 24 hours, considering I'm flying across the globe and it's already midnight where I am locally. So right now we are sitting on a 50% Fibonacci support. Now, of all the Fibonacci lines, the one that I really care the least about is the 50% line. Now, it sounds sexy, it sounds great. You had a 50% correction. A 50% correction is the most important thing in the world to me for an IPO. An IPO falling 50% is insanely important to me. Other than an IPO falling 50%, I don't really care about a 50% retracement in either direction. And therefore, it looks cool that we're stuck on it, but it means nothing to me personally. What does matter to me is the shape of the candlestick. It's the thing that matters the most. When I see a candlestick that closes near the lows of the candle, I expect it to go lower. Does that always happen? The answer is absolutely not. You can see our big red candlestick right here. the week of the 22nd of July, and I would have expected this to go lower, and it did not. It went up and it made a lower swing high, but then it continued to go lower. Um, Now, this giant red candle, this one actually did go lower, right? And it went lower enough. Oh, let me hold on. Let me slide this over. It went lower enough to profit from, right? So basically, what I'm saying is when a candlestick closes at the bottom like that, we did go lower and we went lower by 10%. And going lower by 10% is pretty damn relevant in any market. Um, it didn't go lower right away. It went lower the following week, which would have been enough for you to get out with a break-even stop loss and not lose any money. But ultimately, it did go lower before going higher. That did not happen on, that also happened on this big red one. That did not happen on this big red two. And that clearly did not happen on this big red nine. Of all the candles this year, because this year has pretty much been a bullish year straight up, right? I will say the most surprising thing this year was, I don't even know why I'm talking about ancient history, but the reason why you guys are, I'm gonna focus on people that care about my work and not the trolls. I'm gonna try to be a lot more zen in 2020, and I will talk to the people that actually care. The candle, the this year's candle, I guess there were two candles that really surprised me. This one surprised me only this giant red candle in April. Uh, it, the only reason why it surprised me is because it happened on a nine itself, right? Now, the nine doesn't tell you where the slowdown or reversal is going to be. It could happen on the first minute of the candle. It could happen on the last minute of the candle. Now, this being a nine candle, actually, um, the sequential did not fail, right? Like this, you had this big upswing. The nine says, hey, this is the end of your rally. And look, 1, 2, 3 weeks of consolidation, right? So the sequential did not fail. I was just disappointed that this happened on candle number nine. If this happened on candle, and it had to break this green line. If this happened on candle number 2 or 3, I would have been a huge bull, huge bull. But only because it happened on the candle number nine that caught me by surprise. Um, that still wasn't the most surprising candle of the year. For me personally, the candle that surprised me the most was this candle here, the candle of June 10th. That's the candle I really did not expect. Like, if there was ever a week where I was going into that week insanely confident as to where the market was going to go, it was that week. It was the week of June 10th, not July, sorry. So this week of June 10th, going into this week, I would have been insanely confident that the market is going to go lower. And it didn't. It went higher, right? And that's where, good money management and stop losses will protect you. Because had I been actively trading, I would have already been short. I would have been short because of the rejection of setup trend line, the reversal candle on candle number 8, and the reversal of candle number 9. So I would have been short going into the 9 candle or early on in this 9 weekly candle. But I would have expected this green one price flip candle to be even potentially even worse than this 9 candle. Okay, so this is the candle that caught me by surprise the most. I don't even know why I'm talking about it because it was just in my head. The current candle is about to close near the lows, assuming in the next 24 hours the price does not move at all. And therefore, the only thing I can expect for next week is that the prices are going to go lower. Do they have to go lower? Of course not. Okay. Where is reasonable support if we continue to go lower? Well, if we go lower next week, that's going to be a red one price flip. That means that you're in neutral territory according to sequential. You have a double bottom at 7,200, and this double bottom at 7,200 this time around comes with a double support zone. It comes with a support zone of the 50-week moving average, in addition to the Fibonacci line. Now, I don't like double bottoms. So if we do go to 7,200, we are probably going to go lower. Okay. Um, but right now, while the sequential is not bearish, I am based on candlesticks and the current shape of the candle. Okay. The sequential, however, is still green because of this insanity that happened the week of October 21st. At the very end of that week, when all of us were leaving Bali. Um, you know what? Good time to talk about tonebase.com. Check it out. If you guys want to support my work, please check out the affiliate section. Um, Oh, I can finally put a new affiliate on here next week. It'll be a Bitcoin debit card. I know there's 100 of them out there, but I finally decided to affiliate with one of them. It doesn't mean it's the best, but it's the one that I have decided to do an affiliate with. Always do your own research, and I will have that affiliate link on this page very, very soon. If you want to support my work, please check it out. Got a bunch of exchanges, of course, TradingView. If you're going to use these services anyway, it's the best way to pay your content creators without actually losing any money out of pocket or donations. It's the least intrusive way for someone to support your favorite content creator. Unconfiscatable 2020 is now on sale. The poker game will sell out by Christmas. The poker game will take place on um, February 23rd, the last day, which is Sunday. The conference is on February 22nd. We will have more workshops, guys. You want to save all the days. The first workshop starts on Thursday. The second workshop day, Thursday the 20th. There's also a pinball tournament at the Pinball Hall of Fame, which is going to be awesome. I can't wait to play. You guys got to find out how old I am based on the pinball machines that I want to play on. And the carnivory dinner, of course, seats will sell out. They will sell out. We're adding speakers every week. Colleen Sullivan, great friend of mine. She's a CEO and a lawyer of CMT Digital, which is a hedge fund. Larry Cermak of The Block, still talking to a bunch of people to get them as a speakers. Was able to reach out to Phil Locke. He wants to play in the tournament. He played last year along with Jennifer Tilley. They're not yet confirmed, but I cheated. I put them on the landing page. Come out, play with some pros. I got to reach out to Doug Polk again. All right. Uh, Flight boarding soon, so let's move on. I can, talk about this stuff all day. Oh, damn, AIM Summit in Bali, which is where I'm going. Anyway. Um, all right. The daily chart. Let's take a look at what we got. So I think the major thing that's going to happen in the near future is the def cross between the 128-day and the 200-day moving average. Both of these moving averages are critical. Now, we are back below the 200-day moving average. And here is what I believe is going to be important. I'm going to use, okay, I'm going to use the shift key. This is the candle that closed below the 200-day moving average. Okay, and we stayed below the 200-day moving average until this candle. That is 30 days. 30 days. Okay, that's the benchmark we're working with. Oops, didn't mean to move that. So therefore, I'm going to apply the same benchmark. I'm going to hold the shift key. I'm going to click on this. I'm going to go 30 days. If we stay below the 200-day moving average, oops, I'm an idiot. If we stay below the 200-day moving average, I'm not going to touch anything there. If we stay below the 200-day moving average for longer than 30 days, that means that the current period is actually weaker than the prior period, even if the current period stays above the 7,200 low. This is just my viewpoint, right? It's relation to the 200-day moving average because it also went up. And therefore, the longer you stay below the 200-week moving average, the more time it has to level off and start to turn down. You don't want the 200-day moving average to start turning down. When the 200-day moving average starts to turn down, things do not end well. Right here, the 200-day moving average turned down. See, we went below the 200-day moving average for a little bit. We fell below it. We retested it. Fell lower. Retested it again. And right here, we tested it again. But this time, the moving average was going down. And then look what happened after that. Okay? You do not want this 200-day moving average to flip over and turn. Now, that may not happen for quite some time because of this big run up. But the longer we stay below, the more likely it is. This def cross is not looking good. Can the price bounce into the def cross? Yes, it absolutely can. But that doesn't change the fact that this picture of downtrend is not looking good. Um, Everything got skewed by this ridiculous 2-day rally. It's just Bitcoin got a little oversold, and there you go. At this point, we're back to this level. Now, this is good support. You're sitting in this at the top of this consolidation zone that we had earlier. That's good support. However, if this breaks, and it did break, right? Like, what did I say on the last podcast? If we break this line, I should probably raise this line a little bit. Let's be accurate here. This line should be just below the moving average and right below that swing low. Okay, that's the line. This was the line in the sand. 85.40. Okay. So what did I say last time? If it goes below this line, I'm pretty damn bearish. Therefore, I'm pretty damn bearish. To me, the 8,500 support has been lost. Does the price of Bitcoin have to go down? Of course not. Is the probability that it will go down high? Yes, it is. And therefore, it is. Oh, thank you for reminding me. Bayan, you are correct, sir. If I go to YouTube, if I go to my YouTube channel, God, I hope I don't dox anything. And I go to Alicio Rastani. I was on his podcast the other day, and I think this is the video. I haven't had it. He just posted it, I believe. So check it out. It already has 9,000 views. I should probably tweet this out. Alicio, smart guy. I was in his private group, and then we chatted a little bit of Bitcoin. This just happened the other day. You can see that I've had a haircut since then. Looks better, right? Well, you can't really see. I'm on a little tiny screen in the corner there, and looks like it's about 6 minutes. I thought we chatted for about an hour, but here's your 6-minute video. And thank you, Alicio. I had a great time on your podcast. Good chat. Once I get a free minute, I would love to call you and have a actual private chat. And there you go, guys. Go ahead and check that out on Alicio Rastani's YouTube channel. That's it. That's it for me, pretty much. I can glance at the price of gold. I am looking at, gold's already starting to turn. I saw this move in gold as a dead cat bounce. I thought it could even go as high as 1480. It's already starting to turn. The moment I get a red 2 going below a red 1, that could be disastrous for the intermediate term of gold. This is not a good looking chart, though similar to Bitcoin, and I am looking for a bigger pullback in gold. S&P, very curious. That can't be the latest chart. That cannot be the latest chart. Or can it? So we can. Maybe it can. Is it? Let's see. Oh, yeah. Look, I had absolutely no idea. Holy shit. Wow, look at that monster. Well, I was bullish above this green line, and I don't really remember what the hell. Thank you.
Planet Musk. I don't remember what I said on the last video about the S&P 500, but I know what I've been saying about the S&P 500 for the last 5 years. Higher, 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 and higher. And tomorrow, Monday, is probably going to be the top, okay? Because that's a 9. That's not just a 9. That is a triple 9. 1, 2, and 3 coming up on Monday. That is a triple 9, folks. I am gonna, if I was long in the S&P 500, I would take my profit the same way I would have taken my profit on November 5th and would have re-entered on November 7th. I would take my profit on November 18th. And if it continues to go higher, I would probably re-enter on November 20th because I don't like to trade the candle following the 9. I like to trade the candle after that if the price continues to go higher. Wow, what a bullish candle. The weekly, however, is still bullish. And like I said on Alessio's channel, I was not very concerned for the top, and I was still bullish. I'm not going to look at individual stock names. I don't want to miss this flight over to Dubai. So that is pretty much it for me. Please go to tonevase.com. You can check out my travel schedule by going to calendar. You can see what conference I will be going to in Dubai. Where am I? AIM Summit is in Dubai. I had to cancel all of my December travel. It was just becoming too much, and I had to take a little bit of break. But 2020 is going to be a monstrous travel year, guys. Yeah, it's going to be even worse than 2019 for me. And after that, we'll see if I'm going to keep doing what I'm doing as far as travel is concerned. All right, that's it for me, guys. Thank you so much for watching. And I got to run and catch my flight. And I will see you all on the next one. Good luck trading.